All right, we're live. Hey there, thanks for tuning in to another live broadcast from the insuranceproblog.com. I'm Brantley Whitley. The other guy that you will see in a moment when he speaks or makes a noise is Brandon Roberts. And if you've watched our lives for any length of time, you'll notice that little different background. Trying to get closer to the source of internet lifeblood in my house to see if we can stop the robotic talking thing. Everyone thinks that I talk like a robot because my internet freezes every 10 seconds or so. But today we're going to talk about, and excuse me for being a little flustered today. I literally just carried everything downstairs and set it up here in my kitchen. So about, I don't know, 2-3 minutes ago. So today we're going to talk about how do you, Brandon, what's the, what are we talking about? We're talking about how to pay for
whole life
college.
insurance to pay for college.
How to use whole life insurance to pay for college. I got to get that term right. I guess I'll let you carry it away since you seem to have much to say about the topic. And
I didn't have to uproot everything this morning and move it to my kitchen.
Well, I mean, I printed the notes off at least 45 seconds ago. So
hey, that's good. That's good. So this is a subject that people often hear about, and I think causes a lot of questioning. How do you use whole life insurance to pay for college? And in many respects, there's really nothing special that has to be done. You can own any whole life insurance policy, and you can use it to pay for college.
Right.
So if you own a policy that's maybe decades old, that was bought by your parents for you, and you've just had it for a long time, and it's got some sum of cash in it, you could technically, if you wanted to, start to take money out of that policy, either through withdrawals or loans, and use it to pay for college.
Right.
But that being said, there's a whole different realm of this idea that is involving people who specifically buy whole life insurance with the intention of using it to pay for college for their children.
Right.
And that's more what we want to focus on today. But you should understand coming out of this that anybody who owns whole life insurance, no matter when they bought it, no matter how old it is, no matter what type of whole life it is, could, as long as it's got cash value, be used to pay for some or all of college, depending on how much cash value that's in it.
And this has been a hot idea in the life insurance industry since before I started 20 years ago. So I'm sure this has been going on for a long time, right?
It has been, and there's various attractive benefits to using life insurance as a means to pay for college. The chief one is that life insurance cash values are not currently included in most expected family contribution calculations that most universities do. Public ones for sure, because they all use the FAFSA. Private ones may differ a little bit, but for the most part,
that all pertains to financial aid. Right.
Correct. If you accumulate cash inside a life insurance policy, you do not have to include that cash value in the calculations that determine whether or not you will be eligible for financial aid.
Right. Okay.
Now, we have established, I think I remember the number, I'm just going to make sure, 5, that's correct, 5 best practices that we want to encourage if somebody is going to use whole life insurance to pay for college.
Okay.
So we're going to run down the 5.
Right.
The very first one is when you buy whole life insurance with the purpose of using it to fund college or pay for college expenses, you do absolutely want a whole life policy that's focused on cash value accumulation. Seems fairly straightforward, but there's a little bit of trickiness to this. Life insurance policies don't come labeled ready to build cash value. So you need to kind of understand if my whole life policy is designed that way. And the best rule of thumb I can give you, the most quickest way to determine if you've got something that it's at least in the neighborhood, is how much of the premium that you pay is just regular base whole life insurance versus how much of that do you see going towards what we call the paid up additions rider.
Right.
And if you see a good portion of that premium going towards the paid up additions rider, chances are pretty good you're on the right track. Now, beyond that, there are some additional quirks to whole life insurance, but we don't really have the ability to impart all that knowledge on you now. And my best advice is that you should seek out some professional who can help you ascertain if the whole life policy you own is truly best for the purpose of accumulating cash value.
Right, because there's no off the shelf. Well, this policy is designed to help you be able to pay for your kids' college in 18 years. I mean,
that's correct.
They don't come with that sort of label.
That's correct. So number 2 on our best practices list is, and this one stumbles a lot of people. The parents, not the child, should be the insured on the policy.
Right.
We've run into countless circumstances where somebody says, I want to use whole life insurance to pay for college, and I want to buy a policy on my kid to do that. And I suppose in the world of association, this makes a lot of sense. It's for them. It's going to pay for their college. Why don't they be the insured? But I promise you, from a planning perspective, that leaves you very susceptible to some very big risks. Chief among them is that you die before your child reaches the age that they start attending college.
You spoiled the punchline. I was gonna toss that one up for you.
If the parent, and more specifically, if there's a primary breadwinning parent, that parent is the insured under the policy, and that parent happens to pass away before the child enters college, now the college funding dilemma is solved. The death benefit takes care of that for you.
Exactly.
Now,
we're sure that that's not what most people had in mind when they were thinking of using a whole life insurance policy to pay for college. They weren't thinking, well, if I die, then it'll work out perfectly, right?
Yes. I mean, that's usually a level of thinking that only weirdos like you and I think about. So it's not something that most people are really sitting at home contemplating on a daily basis.
The best case scenario is that I die and then my kid's college is taken care of. So yes, this is not something that normal people think of. That's for sure.
Number 3 on our list, is the fact that you can implement a policy that is absolutely designed to be paid up, requiring no future premiums, by the time your child is entering college.
Okay.
You do not have to do this, but understand it is an option on the table.
You're just saying you can, but you don't have to.
So don't take any blanket advice on this to say that it absolutely has to happen that way, or it absolutely shouldn't happen that way. Understand that there's a great degree of flexibility with whole life insurance. That's what makes it so wonderful. And so you can make it paid up, requiring no future premium payments once the child goes to college and you start using the policy's cash value to pay for college expenses. But if your circumstances allow you to continue to fund the policy, we can absolutely build something that accommodates that. And whole life insurance is very versatile in that sense.
You just said 2 controversial statements. You said that whole life insurance is really flexible and versatile.
I did.
Those are not things that people usually say about whole life insurance.
Well, I know a lot more about whole life insurance than most people.
All right.
So now that I spent some time talking about how great whole life insurance is, let me tell you about how not great it is. If you are coming to this a little late to the game.
Yes.
Child's already in high school. You're starting to plot out college and figuring out how to pay for it. Now it's time to get serious and save some money. Whole life insurance is not it's not the horse for this one. I wouldn't place bets on it. It takes some years for whole life insurance to return positive cash value on the premiums paid. And so if you don't have enough time for that to materialize, whole life insurance is probably not going to be the best option for you. So if you've only got a few years before your child enters college, there are other options to start saving money that are most likely going to be better options than life insurance will be.
Okay. Well, Brandon, I'm not sure if you're still there, but you seem to have from view. Well, that was, now I'm here alone. So I'm going to wrap this up. We've gone over the top five reasons that you might consider using whole life insurance or using whole life insurance to pay for your kid's college. Looking down at the notes to make sure that Brandon covered everything he wanted to cover there. And I think so. But the biggest balancing act is going to be, you can definitely use whole life insurance to pay for your child's college or to pay for your grandchild's college or whatever. But the biggest takeaway is you're probably going to need to spend a little bit of time on that. You also, I think the last point that Brandon wanted to make was that you probably don't want to intentionally create a modified endowment contract. That was his fifth point. That would not be ideal in that situation. There are a lot of tax issues that come along with that, and it sort of hems you in. I'm not saying that it's the worst thing you could possibly do, but it sort of hems you in long term in terms of the tax implications for you down the road. So we wouldn't recommend that that would be one of the best priorities. It looks like we've gotten Brandon back.
Oh.
Are you back?
Worked.
Okay. I was ad-libbing. I started going over point number 5, which was the point about not creating a mech.
Right. So when it comes to using life insurance, whole life insurance to pay for college, it would be highly advisable that it not be a modified endowment contract.
Right.
That's not an absolute on the table always sort of.
Well, that's what I said. You just sort of hem yourself in long term if you make that choice to do that.
It creates some tax consequences that may not be favorable.
Yeah. You limit your options once you do that. So just be sure that if that's the road you go down, that you understand exactly what your exit strategy is. And for many people who have a modified endowment contract, their exit strategy is they die. That's
yes.
Unfortunately.
So again, whole life insurance is largely more flexible than people give it credit for, and it can accommodate a lot of different circumstances. And in fact, using whole life insurance to pay for college can create a circumstance for the owner to maximize what benefits cash-wise whole life insurance has to offer, and create future funds, attack future financial goals like retirement income planning in a way that really optimizes rate of return in a way that is hard to achieve with other asset classes.
Right. And one of the things we've talked about before, and we won't get deep into it today, but the ability to use whole life insurance to pay for college also allows for people like me who have kids that are headed in that direction to have other options for myself long term. In that I can borrow from the policy, I can pay the policy back, and I haven't completely derailed all of my future retirement income planning needs. And I realize that's beyond the scope, but it does.
Wouldn't it be nice if somebody would create a resource that someone could get and learn all about this?
Yeah, it's really interesting because someone has.
Really? Tell me more.
If you go over to ipblive.com, you can learn more about our book and the awesome bonuses that we're giving away with our book, Predictable Profits. And we talk in particular about this strategy as one of the ways that you can use whole life insurance. Do we not?
We do indeed. There is a, I can't remember if it's an entire chapter dedicated to it, but it's a very specific section.
Yes.
And it is, I think most people find it quite interesting.
Yeah, because it involves, we actually go through a real world scenario where we go through some numbers and show you how it works and how you can use whole life insurance to pay for college without derailing all of your future financial goals, I guess you would say. As a parent who's staring down the barrel of some kids that are going to college, in relatively short order, I can tell you it is the type of expense that can certainly derail all of your other future financial planning needs.
It is indeed.
Yep. All right. Well, let's wrap it up there, Brandon.
Yeah, we're good.
Okay.
That's everything there is to know about using whole life insurance to pay for college.
Yep. Thanks for tuning in today. Thanks for checking out theinsuranceproblog.com. You should always head over there and find out what we're publishing on the blog. You can hear our podcast. There's, as we've been told by many people, they spent months combing through and reading all the stuff that's there. There's 6 or 7 years worth of posts there. And with any luck, we'll be back tomorrow if my internet decides that it's going to cooperate. Thanks for tuning in, and we hope to see you soon.